Today we're talking TSP and which one is worse, a 2008-like stock market crash or increased taxes. Coming up next. Hey, my name is Mel Stubbs and I'm here on behalf of Retirement Benefits Institute to talk to you today about your TSP. Inside of your TSP, what does it look like if you have a 2008-like stock market crash? Also, what does it look like inside of your TSP if there are increased taxes? So first, let's look at the stock market side. In 2008, the stock market, at least the C fund, dropped 36.99%. The S fund did even worse, and the I fund did even worse than that. So let's look at a TSP balance and see the effect of this on it. So for easy math, let's look at $1 million TSP balance. You can see here with $1 million TSP balance, if there is a 36.99% drop, your new balance is $630,100. That is a loss of $369,900. That is a huge loss, and I think most people remember 2008 and they've made some changes to stop this from happening. Most people, as they're getting closer to retirement, they choose more conservative investments than 100% C fund. Inside of the TSP, you can go to the G fund, you can go to the F fund, maybe the L income fund, but you choose something a little more conservative. On the outside world, with an IRA, you've got even more choices. To fix the stock market crash, you have to diversify more and go more conservative. Most people are aware of that. What about increased taxes inside your TSP? Most people we talk to when we do trainings aren't really even thinking about it or aware of how bad it could be. But let's show you an example. Let's say that you're in the 22% federal tax bracket. Let's also say that you have 5% going to state taxes. You can see here on this chart that would mean that there would be 27% of your TSP is designated for taxes, and 73% of it would be your portion. Now for some of you this is going to be eye-opening, because if you had $1 million balance, you think $1 million is yours. And what this is telling you is that $270,000 of it is earmarked for taxes and your portion is $730,000. For some of you that's going to be eye-opening. You only get to spend what is after taxes, and most people have traditional TSP where they haven't paid taxes yet. So now let's say there is a tax increase. Let's say taxes jump. Let's look to see what it is. Let's say you're in the 35% federal bracket and you're in the 12% state bracket. Now how could taxes go up like this? Maybe you earn more money and you moved up the tax brackets. Maybe you moved to a different state like New York or California where the state taxes are much higher. And maybe the federal government just doesn't spend money as wisely as they should and they have to increase taxes. Whatever the reason is, let's just show you how it looks in your TSP. So here you can see that now there are 47% of your TSP is now designated for taxes. That's leaving only 53% of the balance, your portion, that you can spend. This is a huge difference. Look at the side-by-side comparison. On the left, you'll see the 73% portion that was yours before the tax increase has now dropped to only 53% afterwards. Let's go through some of the math. Your $1 million TSP balance, you thought you only had $730,000 that was your portion, but with the increased taxes, now only $530,000 is your portion. That is a $200,000 loss. Where did that money go? It went to the IRS and your state taxes, all because taxes changed. But here's the kicker. If you're holding your TSP balance, you still have a statement that says you have $1 million. It still looks like everything's fine, but behind the scenes, you have a lot less money to spend because there's a lot more taxes built into it. How can you fix this? You need to do what's called Roth converting, where you take some of your money and you shift it to a Roth account each and every year, paying the taxes now because now they're on sale. Can you do that inside the TSP? You cannot do that inside the TSP. That is not an allowable thing you can do. So if you want to fix this impending tax problem, you have to move the money in the TSP out into an IRA. You're going to want to work with somebody that can help walk you through the steps, because you want to convert enough money to make a difference, but you don't want to convert so much that you screw up your taxes now. So there's a fine line of how to do it. So to answer the question in the beginning, which one is worse? Based on the numbers presented, the 2008 stock market crash would be worse. However, I bet a lot of people didn't even think of a tax increase as being that bad, but our numbers show here it can be huge. You can only spend what's left over after taxes. That's your portion. If it changes a lot, it is a huge deal, and you won't have the retirement you think you're going to have if this happens to you. There are ways you can fix it. Now, the first thing I'm going to ask you to do is to jump on over to retireinstitute.com. Scroll down near the bottom, you'll see 3 green boxes. There are 3 different packages where you can get help with your federal benefits and with this tax problem. The first option, you can get a federal benefit analysis. It's a report of your numbers showing you what your pension number will be, what your bring home pay in retirement will be, what your estimated TSP balance will be. All the numbers that you need to know to retire are in that report. You'll have somebody that you can talk to about it, ask questions, get everything answered in that first package. The second package, you get that report, you get to go over it with somebody, but you also get a Navigating Your Federal Retirement book, and you get a 1-year subscription to an online course where you can learn all that you want to learn about the federal government. You can learn about the special retirement supplement, you can learn about the federal health care, Medicare, all of these topics are in there. You can learn all about it. That's package 2. Now, the third package is a paperwork package for people that are getting ready to retire in the next several months, and you need to fill out your retirement paperwork, but it's confusing and you want help with it. So in this third package, you get the report of all your numbers, you get somebody to go over it with you, but you also get somebody to help you complete your retirement packages, help you turn it in the way that it needs to be turned in. It is hugely important that you get this correct. So one of these 3 packages should work out for you. Also, when you're talking to them, ask them about how do you fix the tax problem in your TSP at the same time. All right, my name is Mel Stubbs. Talk to you later.